My name is Jonah Crane. I'm a partner at Claros Group. We're we're an advisory firm in the financial services space, serving banks and fintechs, including crypto firms. I'll be moderating the panel. Why don't we just go down the line so the panelists can introduce themselves, and then we'll dive right into our topic.
Sure. Hello, everyone. I'm Craig Salm. I'm the Chief Legal Officer at Grayscale Investments. Grayscale is the world's largest digital currency asset manager. We manage the world's largest Bitcoin fund, which trades under GBTC, the world's largest Ethereum fund, which trades under ETHE, and several other crypto asset funds.
Hi, my name is Clev Mesador. I'm the Executive Director for the Blockchain Foundation, which is the sister entity to the Blockchain Association, the largest advocacy group for crypto in Washington. Grayscale is a member of the Blockchain Association. The foundation focuses exclusively on education, being a bridge to the industry and public institutions. I've been working in crypto for over 6 years now. I have a public policy background, having served in Congress for Congresswoman Barbara Lee and Betty McCollum, but also serving in the Obama administration. I was a presidential appointee at the Department of Commerce's Economic Development Administration.
Hi, everyone. I'm Cass Sanford. I'm Deputy General Counsel at OTC Markets Group. We operate regulated public markets for the trading of a wide spectrum of OTC equity securities, which includes a number of securitized digital asset trusts, including a number of Grayscale products.
The common linkage between this whole crew.
Thanks. Ignacio Sandoval. I'm a partner in the Washington, D.C. office of Morgan Lewis. My focus is on financial institutions. I'm a former SEC alum in the Division of Trading and Markets, so a lot of the intermediary and sort of market structure issues, especially when it comes to digital assets, I tend to work on.
All right, so as you can see, we've got a good panel of folks to talk about regulation and digital assets, people who are actively operating in the regulated space involving digital assets. So should be a good panel. A little housekeeping at some point, QR code will pop up there. We're at the end of day 2, so I think folks seem to know how to do the Q&A thing, so go for it. We'll make sure to save time at the end for questions or to try and work them into the conversation. So why don't we start with market structure, Ignacio? You mentioned that, and I think it's a very important topic for the regulatory discussion because a lot of the attention on, a lot of the questions around how do we regulate crypto involve basically how do we regulate the intermediaries involved in the crypto space, and I think we've not achieved full clarity on that. So there's still a lot to chew on, as Phil was saying. We're very early innings there. Cass, maybe I'll start with you since you guys operate a bunch of trading platforms on which, as you said, securitized digital asset products are traded. So you actually operate in the regulated space, and maybe that provides a bit of a path forward, at least one option for how can crypto coexist with the regulatory space, and maybe help to answer at least some of the market structure questions that the regulators are dealing with. So maybe you could give us a little bit of background, just sort of on what OTC Markets Group is, and then how that fits into the regulatory, I'll call them, discussions or negotiations that are underway broadly in the public sector.
Sure. So we have a pretty unique regulatory structure as far as how we fit into the larger capital markets landscape. So essentially, we operate 3 SEC-regulated alternative trading systems. But unlike a number of alternative trading systems that you may generally think of as dark pools or internalized systems where broker-dealers can match trades, all of our markets are public, meaning that all of the quotes are displayed publicly to investors. So the regulatory structure is an ATS, or alternative trading system, but it's kind of unlike most other ATSs in the way that they operate. So that's on the trading side and how that works. The only entities that connect to us to provide liquidity are FINRA-regulated broker-dealers. So you'll see the largest market makers like Citadel and Virtu. You'll see retail broker-dealers as well sending liquidity through our ATSs. The number of securities that trade on our system is enormous. There's 12,000 securities across the entire market. We divide those up into tiers. So we have a top market tier called OTCQX, where companies have to meet minimum financial standards. We have a venture market that's the next tier down called OTCQB. The disclosure requirements are there, so everyone on those markets is providing disclosure to investors. That's where you'll see a number of Grayscale products as well as other securitized trust trade. These are very much regulated instruments that are providing disclosure to investors. We have just a slightly more malleable framework, I guess is the best way to describe it, than a securities exchange, which is very rigid in its rule set. Because we operate under a separate rule set, we have a variety of different disclosure pathways that companies can take. So taking the digital asset trust, for example, they were able to be brought to market after conducting a private placement, and I'm sure Craig can speak much better to this than I can, but just simply by providing voluntary disclosure at first without even SEC registration. And again, that's an example of just our markets being very open to different types of assets on an exchange. You have to be registered with the SEC and filing Qs and Ks. On our market, we have a separate reporting structure for banks, for foreign private issuers that are listed on a non-US exchange, for insurance companies, for 40 Act companies. It's just much more diverse. But the bottom line is that all of the disclosure is out there. So that's really been our kind of role that we've played, is allowing the brokers to be able to facilitate a trading market in these types of securities. Just actually on Monday, though, we took a step further and we achieved FINRA approval to actually have broker-dealers trade digital asset securities. So that was a huge step forward as well in our market structure and regulatory stack. Hopefully, again, kind of the way that we're thinking about it is we already have a great framework for broker-dealers to get best execution, to report their trades, for companies to provide disclosure. So the next step is, if certain of these digital assets end up being securities, we're on the path to allowing, that to come into the regulated market.
That's fascinating. It's a great development. I have wondered literally for years sort of why are ATSs not being viewed as a viable alternative necessarily here, right? There's been this standoff with respect to exchanges and crypto where SEC, for two successive chairmen now, has sort of said, hey, if you're trading digital asset securities on your platform, you got to be an exchange, come in and register as an exchange, and the industry is sort of saying, but the SEC not telling you exactly what that means or how to do it, and then the industry saying, well, your rules can't possibly work for our fancy new asset class, so we can't sort of enter that sphere. And I always thought ATS has provided a nice flexible middle ground for the reasons you just suggested, including the tailored disclosure regime. So I think that's an interesting new development. Maybe we'll circle back. But why don't we move to you, Craig, and maybe you can sort of give us the, how Grayscale thought about. Now this is a decade ago. You guys launched, I think, the Bitcoin Trust in 2013. Is that right?
Yes.
Yeah. So this is not like some recent idea you had, but you seem committed to having sort of doing this in the regulated space. Maybe you can tell us, why you took that approach, and obviously you're trying to take it further, and you've tried to issue an ETF, run into some roadblocks at the SEC. Maybe you can touch on that too.
Yeah, definitely, and I can very easily tie it into everything that Cass was just covering. So we launched Grayscale Bitcoin Trust in 2013. This was a couple of years after Bitcoin itself was invented. And we did it always wanting it to become something called an exchange-traded fund, ETF, which is really the most accessible way to access any asset class. But back then, and unfortunately still today, the SEC is not comfortable with that type of wrapper holding digital assets. And so what we did was approach it from the next best thing, which is an exempt offering through a private placement to just accredited investors. This is important because back then and even today, investors want to access the digital currency asset class, but they might not be familiar or comfortable with going to a Coinbase, for instance. If you are a more regulated or institutional investor, you actually can't just open up an account on one of these platforms. It doesn't fit within your investment mandate, your risk compliance and other advisors just won't allow it. Investors aren't comfortable with it. And so we wanted to just approach it from a very traditional asset manager model that just happens to manage non-traditional assets. So we launched as a private placement only to accredited investors. That's the first stage of all of our products. But then after 1 year, we did something quite innovative, which is you can offer a private placement, but then investors who invest can now have their shares become freely tradable because they've borne the risk of that investment for at least 1 year. And you might say, well, why is the commission, why are regulators comfortable with that kind of offering, but not the ETF model, which is available to anybody? It's just a policy choice that's been made. If you're wealthy or sophisticated and you bear the risk of the investment, you can then go and trade that with others. But the problem is if you have shares that you can trade but nowhere to trade it, well, no one's really going to be trading with you. And so that's where OTC Markets comes in, utilizing something called Rule 15c211. That is a very robust framework that allows brokers and dealers to show quotations on securities. It's an extensive rule set, and the process of verifying compliance with that rule is not so dissimilar from a company going public. You need to have proper disclosures, talk about the business, risk factors, audits, and things like that. And so it's a very extensive process that we've now done for Grayscale Bitcoin Trust, which is GBTC, as well as 17 other digital asset products. And so OTC Markets is really a very key component of our overall model because it's where retail investors and others who can't invest in the private placement can now buy these shares on the open public market. So, it's been a great platform for us. It's malleable is a great way to describe it because, it's not the same thing as listing on exchange, but you have things like annual reports instead of 10Ks, quarterly reports, things like 10Qs. So that's where we fit in with OTC Markets. But you mentioned what we're trying to do with GBTC becoming an ETF. That's something that we're trying to convert our flagship fund, the Bitcoin Fund, into. Right now, we're in the midst of a lawsuit with the SEC because we feel that investors want this type of product. 2 years ago, the SEC approved a Bitcoin futures product, which really just shows that if you're comfortable with the derivative of Bitcoin, you should also be comfortable with the underlying asset itself. So that's where we are right now, and we're actually expecting a decision from the DC circuit where this case is by the fall of this year.
All right, thanks for that. So you mentioned the tailored disclosure regime and the fact that you still issue things like annual reports, which aren't maybe in the 10K format that the SEC uses.
So we actually, after being quoted on OTC Markets, another step in our product life cycle is actually going to the SEC to become SEC reporting. Once that happens, then we are filing Ks, Qs, audited financial statements.
Yeah. So with that disclosure, and I know sometimes it's a tricky thing with digital assets because there are a bunch of questions around, how do these traditional concepts of disclosure apply? What's really important and material with digital assets? And it seems to be sort of new terrain for folks. But Clev, maybe you can talk a little bit about beyond disclosure, what else from an investor protection or consumer education perspective are you focused on? What do you think is important and resonating and might be working in terms of, getting consumers and investors up to speed on this new asset class?
Yeah, so one of the great things about the whole blockchain and cryptocurrency space is the fact that it has expanded access. And so and now today you have all of these new retail investors that are not traditional accredited investors, as Craig mentioned, and folks who want to access financial markets in a decentralized way. And what we're seeing is a regulatory environment that's making it hard not just for exchanges, but also for especially investors like myself, professionals who haven't been able to have access to traditional banking or through brokerage companies in the way that others have. And so when you have platforms like Grayscale that seeks to democratize access and actually provide, make sure everybody can access this new financial asset class, the biggest sticking point for the regulatory environment has been consumer protection, consumer protection, consumer protection. And what exactly does that mean? Because right now, for the federal government, the consumer protection is literally disclosures, right? And it's something, I believe, CFPB Chair Chopra was on earlier, who said it's no longer even effective because most people don't even read the disclosures. The amount of education that's supposed to take place is not happening. So what we have is sort of a standoff in Washington, particularly with this administration and the SEC, that's saying because of consumer protection, these things should be restricted, these things should be restricted. So as a person who focuses on financial inclusion, I push back by saying, well, consumer protection is great, all consumers should be protected, but the federal government has a mandate for financial inclusion as well, right? That is not really complying with. Consumer protection is the antithesis of financial inclusion. And when you talk about communities that want to build wealth, that want to access financial markets to do so, right, we have to recognize there's a tension between these two policies and find ways to actually find a balance. And what does that balance look like? And I do think that at the heart of the matter is the fact that, in my opinion, Washington and the regulatory bodies do not want to do the hard work of governing that it would take to actually create a new regulatory framework that doesn't just work for, financial companies, but also works for the new retail investor that is much more diverse, that is younger, and that does want more options.
Very good. Ignacio, maybe we can zoom out a little bit. And while the SEC has not put forward tailored regulations for digital asset exchanges, they have put forward a bunch of regulatory proposals in the last 6-12 months that do impact the digital asset space. Some of them, mostly within other regulatory proposals that they've put out, sort of broader capital markets regulation. So maybe you can walk us through some of the broader context and what the SEC is actually up to and where you think that's headed and how it's going to impact the industry.
Sure, and I think at this point it's helpful to sort of note where the SEC has gone and where they're going. I think initially where you saw a lot of the enforcement through or policy making through enforcement was going after these smaller issuers that were connected with some sort of fraud, sort of the low-hanging fruit. What you're seeing now is a shift, at least in the enforcement stance, that has carried over into the policy making and the rulemaking, where now you're going after the intermediaries and sort of part of some of these market structure questions. So, at the end of last year, the SEC put out a couple of proposals to effectively overhaul the U.S. equity market structure framework. In passing, they mentioned, hey, this is going to apply to digital assets as well. So there's been a lot of pushback, at least what you see in a lot of comment letters, pointing out to the SEC, you haven't really sort of articulated how this is supposed to work and sort of how this is supposed to apply. This is a new asset class that doesn't really work for the framework you've already established. And I think we saw a little bit of this with, speaking of ATSs, sometime last year, the SEC was going to propose reworking the definition of an exchange to capture a bunch of messaging systems, right? And in passing, they just happened to mention that this would always apply to digital asset securities. Well, they were inundated with comment letters on this, and it effectively forced the SEC to reopen the comment period on the ATS proposal to address at least some of the comments with respect to digital assets. So in reading that proposal, you'll see they placed a lot of emphasis on DeFi and how digital assets are in, or at least from the SEC's perspective, have always been within the framework. So, there's two ways to view this, right? One way to view this is, okay, they're taking these comments seriously and they're trying to address these issues in sort of in the policy sphere. The more cynic approach, and I get this from having been in government, is that, on some level they're just trying to cover themselves, which is establish at least something that the commission and sort of the enforcement staff can point to say the commission's views have always been clear. And so this is just another example where we've made that clear. So there's always a little bit of tension there. And, I think pointing to an earlier comment, there's always this tension, right? And I think from my perspective, the SEC has used sort of the shield of investor protection to shoot down a lot of innovation here without forgetting that they also have another mandate, right? The public interest and sort of capital formation. And they're sort of, using the shield of investor protection to stifle another part of their mandate.
Yeah. So, I'm interested to get a little bit granular here. Yeah. The industry is very concerned that various digital asset platforms or DeFi protocols might be, swept into the rules somehow. They're very concerned that, traditional exchange regulations, like I said before, can't possibly apply or just are going to be unworkable in this new space. It takes a more flexible, malleable structure like an ATS to even do anything, and even in this context, it's really, you're putting a regulatory wrapper around the digital assets, so you're not necessarily even technically trading the digital assets themselves directly. So what are some of those frictions, just at a sort of high level or a list? And Ignacio, I'll throw the question to you, but anybody else feel free to respond to. What are some of the challenges if we were to just try to map the current exchange regime onto the crypto markets? Where does that become problematic?
At least from my perspective, the sort of issue that's always been hanging out there and that still hasn't been addressed is custody, especially for some of these assets, right? The SEC, they put out a concept release or a framework a few years ago for, limited purpose digital asset brokers to custody assets. Sounded great, right? But to my knowledge, no one has actually been able to successfully register as one. And so, that's just part of the puzzle, right? Where you need that part of the puzzle, the custody piece of it, in order to be able to trade at least the underlying assets, right? The actual digital assets, and be able to custody them. If you don't have that piece, you can't really build a framework on top of that, because there's no one who can actually custody the assets. But you're seeing this in passing with the SEC's safeguarding proposal a few weeks ago, right? Really geared towards sort of addressing digital assets, but didn't really mention them, right? But they're going to get inundated with comments there as well, right? If you're going to develop a framework, you got to tell us how it's supposed to work.
Yeah. As I understood it, one of the challenges there was the limited purpose broker-dealer designation. It was you had to do only digital asset securities activity within that. And of course, there's no clarity around what is or isn't a security in this space. And, you might want to, trade Bitcoin and some digital asset security and custody the same in your business. And you literally can't or prohibited from doing both in the context of that limited purpose broker-dealer. So it's sort of a catch-22.
Yeah, and it's an attempt on the part of really trading in markets to silo that business, because in their view, they're always thinking, okay, where's the systemic risk here, right? So they're trying to silo this business, but in doing that, they're just stifling it.
Yeah, that I see is totally unworkable.
And I think the main issue is that if you look at traditional finance, you have a system that was formed over hundreds of years where those roles, custody and clearing and broker and dealing, were just segregated. Mm-hmm. And there's a good reason for doing that. It prevents things like conflicts of interest, but that's just the way things happened over the course of history, and therefore that's why the laws and rules were written to account for that type of state of things. Whereas with crypto, you had the opportunity to come at this with fresh eyes on a principles basis, and a lot of those roles ended up being served by one organization. And with that, it could create a lot of efficiencies and reduce costs, and in some cases prevent certain risks, while also opening up different kinds of risks. And so now we're in this situation where you have things like exchange and custody having the SEC come out with proposals for rules trying to fit those old way of doing things into the new way of doing things. And we actually submitted a comment letter for the qualified custody proposal, because our main concern is that a rule change that affects crypto will actually create more costs, more burdens, without any added benefits. So why take something that for us has worked since 2013 and try to undo that just to fit it into the old way of doing things?
Yeah. Sorry, go ahead, Cliff.
And I'd like to add, in terms of what we're hearing from the SEC right now, and even from members of Congress, is that the existing rules, apply, right? And crypto is just not in compliance, that the existing rules are fine. And, as Craig mentioned, we're talking about applying 1930s policies to, this continuum, because fintechs was a response to the fact that so many people were already operating outside of traditional banking and the traditional markets. And to throw a wrench in here, I do think as we're looking at, how do we mitigate risk and actually further consumer protection, we need to go beyond just disclosures. I actually think we need to look at where the nerve center of adoption is and focus there. When you look at the adoptions happening among young people, working class people, communities of color, we need regulatory authority for credit unions, for minority banks, for community banks. Right? The recent banking collapses have shown us that the traditional banking model needs to be revisited, and the existing rules have led to that. But if we are concerned about consumer protection, we need to make sure, as we're having this larger conversation, we're looking at what are those institutions that can really service people, as well as provide consumer protection measures and resources. And those are the credit unions and the community banks and the minority banks. They need to be part of this conversation.
I think that is a great point too, of the friction about business models as well. I think that a lot of these business models, the broker-dealer framework and the ATS framework, would be wonderful for them. Can you scale as fast, though, when you're operating under that regulatory scrutiny and framework? Of course not. So that's a friction point, too. I think it would be, I'd love to see more crypto-native intermediaries come into that framework and operate, but it's extremely expensive. And the regulatory burden of operating there and being subject to ongoing examinations and constantly responding to regulators, and it's also not a one-for-one fit, you're a new business model. I think we need to be more encouraging of those new business models that are more efficient, that have more of a stack of technology that covers different previously disintermediated, regulated entities, but we need to welcome them in and understand that ultimately, if you can streamline that kind of regulation that has stuff like customer protection rules, market integrity rules, investor protection rules, that's actually a good thing for your business. If your business can withstand that and still grow, that's a great thing. But it's just so wildly different that if you could move your operations outside of the US and have such a competitive advantage as far as scaling your business, we need to kind of deal with that.
And that's a big issue, right? If we're effectively going to kill crypto in the US, it's going to go offshore, and all the innovation is really going to develop offshore. I like to use the example of 5G, right? 5G was all developed offshore because we didn't really want to invest in the infrastructure. So I just think that's like a real life example where innovation left our shores.
Yeah, and
Yeah,
also,
but 5G doesn't have rules that say you can't access the U.S. markets. Crypto can only go offshore so much if people want to actually, access U.S. markets. I think the question will be, do U.S. consumers or investors lose out as a result? But
I think it is a real concern. In the last few weeks, you've had, even just yesterday, Jane Street and Jump said that they're looking to continue their businesses outside the U.S. Coinbase just last week said that they were exploring expanding or leaving, going to the U.K. I think there's a view in D.C. that companies won't leave, and they want to be a part of the U.S. markets. But with fintech, with crypto, with more digital businesses, being outside the U.S. is much more of a reality than it's ever been. So I think that's a real cause for concern.
yeah, look, and I think some people in D.C. might say good riddance. Like that, I think that's just where we are in this cycle, right? And some of the challenges we've seen, I think Gary Gensler probably feels very vindicated about having expressed concern about conflicted, vertically integrated business models when you see what happens at FTX, right? So,
Which was outside the U.S.
Sure, it was based outside the U.S., but that's precisely the model that he's expressed concern about. And when you have custody and trading and brokerage all happening under the same house, and look, I think it's a fair point. Japan had exchange regulation and didn't have the same issues. It took a couple months, but FTX's Japanese customers got their money back. So did their U.S. customers that were working through U.S. regulated institutions. So, it does seem like there was a bit of a difference in terms of the outcomes for customers who were working through regulated parties. Right now, that regulation didn't all take the same form. None of them were securities exchanges, for example, but it was some level of investor protection there. Clive.
I would add, and along these lines of, do we want to be able to innovate here? And you're absolutely right. Gensler's just like, deuces, good riddance. But it's not just short-sighted. It's dismissing the future of money and the future of commerce, how it's actually a pathway for micro enterprises, small businesses, entrepreneurs, startups to actually innovate here, right? It's one thing for, these regulators to actually think about the disruption that's happening with crypto and how to alleviate it by essentially trying to ban crypto. But what about the small operators, right? When you look at the diversity of the DeFi ecosystem and even, Web3, if an NFT looks like a security to you, then why innovate here? So I think, for me, my biggest concern is the fact that we do have a Washington that's not just pushing big business out, it is ensuring that e-commerce businesses, the new cadre of small businesses that it continues to be the engine of America's economy will not be able to operate here and will not be competitive globally in the innovation economy.
Yeah, it seems like a year and a half ago, regulators were really working hard to try to get up to speed. And they were basically like, they took the view that crypto was here to stay and they better get smart about it fast. And then sort of Terra Luna happened, the market fell apart last year, and then FTX happened. And there seemed to be a very quick change in, well, gee, maybe we can just keep this thing at bay, keep it outside of our regulatory perimeter, as they say. The problem there is that, you wake up in a couple of years and you're right back where you started, which is we've made no progress on figuring out how to actually do this, how to actually bring it into the regulated system. It's evolving overseas, et cetera. So let me ask a question on that. Now that Europe has put forward a regulatory framework, the UK's got a proposal out there. As I mentioned before, Japan has for a long time had at least exchange regulation following the blow-up of, the hacks with Mt. Gox and the like. They responded with a regulatory framework. What do you think the impact of that will be? Do you think that those frameworks will provide the certainty that market participants are looking for and will have an impact in terms of where people are doing business? You sort of alluded to what I believe your answer is earlier, but just wanted to put it out there directly.
Yeah, I think seeing other financial centers around the world be able to draft and implement comprehensive crypto policy shows that it can be done, and I think that's encouraging to see, and something that U.S. regulators and policymakers that whether you like crypto or you acknowledge that it's here to stay and therefore how do we regulate it and make it safer, I think it's something that you can use. And I actually think it has kind of flipped in DC, where it used to be crypto will just go away, it's nothing, to now it is here to stay, so how do we protect investors and how do we protect consumers, which I actually view as a really significant step forward. So I think it's good that we're seeing this happen in other parts around the world, and I do think we will eventually get there here in the US. Before FTX, there was a lot of good progress being made, which unfortunately was being influenced by FTX, which is quite ironic, because if that had been done, then I think they would have been caught through their own regulations that they were a part of drafting. Totally separate topic. But I think people have moved past that and are still making progress on it. We have this new digital assets subcommittee in the House, which is solely dedicated to digital assets and fintech. They've already had 3 hearings, I believe. So that's really great to see. And so we will get there. On the Grayscale side, we want to have a Bitcoin ETF. We think it's really good to further bring Bitcoin into the regulatory perimeter through that type of product. It's already held by nearly 1 million investors across all 50 states, has tens of billions of dollars, tens of hundreds of millions in daily trading volume. So, who we're protecting by not allowing it to become an exchange-traded fund. And I think once that happens, it'll have a lot of positive externalities just to further bring crypto into the regulatory perimeter.
And I'd like to add that I think, the one thing we have to do to get there, right, how do we move that needle, is to ensure that in Washington, crypto remains bipartisan. Because the arc of legislation is long. I know, for crypto, we actually want to get there quickly, but when you look at how long it took to pass campaign finance reform or healthcare reform, Hopefully it won't take that long, but I think right now we are at a point where the tension and the friction in Washington is so intense, where you are seeing Democrats sit on the sideline and Republicans taking the lead. But in order for us to get to a regulatory framework, we have to make sure this issue continues to stay bipartisan, and also that we have a long play as well. I actually think, we're a decade out from meaningful legislation, but in the interim, the debates that are taking place are important.
I think that while legislation works its course, and I hadn't heard 10 years, but that's quite a ride.
Well, 10 years in crypto is
Yeah,
1 year.
that's a lifetime. I do think that when approaching the SEC, I think the industry folks need to start playing in their kind of language a little bit more, which is no action letters, requests, very specific requests for relief. And I just don't think we've seen enough of that from the industry quite yet, because there's been a lot of requests for no regulation at all, or this doesn't apply to us, and I just don't think it's that constructive. I still think we do need to have clarity at some point on what's the threshold, like what is a security and what isn't, and that's likely to come from legislation. But within the SEC's framework, I just think that they're looking for, they don't issue pieces of paper that say you're good. They issue very specific exemptions from rulemaking that's existing. So I would call for that.
Yeah, and as a former regulator, I would add that, having been part of the no action and exemptive process and writing the responses, it's an incremental process, right? So right now it's been go big or go home, which is don't regulate us and leave us alone. I think at this point, if regulators are going to be approached with that sort of relief, it has to be very incremental and be done in baby steps. And so the reason for that is pre-Gensler, we did see a number of no action letters be issued. Those have effectively stopped. Right, and that's, the inside baseball is that the 10th floor, which is what we call the floor where the commissioners are on, are just, heavy-handed in any request for relief, and are more likely to deny it or just slow walk it. So that's why it's really important to open up the dialogue and really, really speak the SEC's language, which right now is investor protection.
I will say, I do think the work that, the Blockchain Association, even CCI, Coin Center, and others have done, we've gotten the industry to a point where the industry wants regulatory clarity, right? The industry recognizes that we actually need to get there. I think the biggest issue is, the regulatory agencies are fighting for turf. And then the fight between regulators and Congress in terms of who should move forward, is a big sticking point right now that needs to be addressed as well.
But I will say that sometimes you need to go up against the Goliath, and I think what Grayscale has done in challenging the SEC is really important, because it just shows the SEC that not everyone's just going to roll over, and oftentimes if they're challenged well enough, they do lose.
Yeah, well, let me ask a question about that. So we had this standoff now for years and years in the crypto space between the industry and the regulators that I sort of alluded to before, and there are like 3 ways for these things to get resolved, maybe 4. 1, Congress could act. Cleb thinks it's going to take 10 years, so don't hold your breath. 2, might get decided in the courts, or at least pieces of it, might get decided in the courts. Maybe an ETF question, XRP's got a case on whether XRP is a security or not. That could have big implications. So we have Congress, we have the courts, we have the regulators themselves issuing various regulatory pronouncements. Where do you think these questions are going to be resolved in the near term? Let's ask that more specifically. Go down the line. Are we going to get a bill in Congress, in this Congress? Cleb, I know you know your answer. On the jurisdictional question, right? Just a simple jurisdictional fix, fill in the regulatory gap, giving presumably CFTC, but possibly SEC also some authority over digital assets, spot markets. Are we going to get that bill, or are we just going to talk about a stablecoin bill and not get anything else?
Yeah, well, so I hope it's not all played out in the courts. Our lawsuit is not something that we take lightly, and not something that we wouldn't have done if we didn't feel very convicted over it. We're doing it for our investors. It's a professional disagreement we have with the commission. But I do think legislation is where a lot of the other very important high-level issues will be solved. And I think stablecoins are a natural incremental step forward just because it's very easy to understand. It's a very significant part of the whole crypto ecosystem. And so I think in less than 10 years, we could have something move on that. And then I also think the decision of which assets are securities versus commodities, is it CFTC or SEC, also has a good chance of being resolved because there was a lot of good language in several bills that were being worked on last year, and I'm still seeing those move forward just in, different members of Congress putting their own touch on it. So I'm very hopeful. And then I mentioned the digital subcommittee. So all those things are really good. And I think we'll feel very happy following a very tumultuous 2022 in the coming years.
And I'll clarify, I think it's a decade till we get a bill passed in both chambers and to a president's desk to sign. But I think McHenry and his team are really committed to a stablecoin bill this year, and I think that's the thing that they can do on a bipartisan basis. I think they believe. I will say under is it a security, is it a commodity, CFTC versus SEC, I think people underestimate how much jurisdiction matters in Washington, right? So if you're financial services, that committee has oversight over the SEC. The SEC is a Goliath over Congress is not going to give up regulatory oversight to the CFTC that falls under ag. So the complexities of Washington in terms of who has authority makes it difficult on that issue in terms, at least, is it a commodity or is it a security?
To be slightly more hopeful, there was a joint committee meeting yesterday between the House Financial Services Committee that has really taken the reins on this under McHenry and to solve this issue and agriculture. So I do think that doesn't happen very often in DC where they'll convene the committees like that together. And so I do think that is maybe a good indication that there's going to be some resolution of this issue because there's so many people, ourselves at OTC Markets included, that just want to know, are they securities? If so, we'll help to the industry provide a solution to trade them. If they're not, great, we'll move on to something else. And so it's really, a lot of people are waiting on this, and I am encouraged by the fact that both committees of jurisdiction met and are working at least to resolving the issue.
I mean, I'm not optimistic. I don't share the same optimism, unfortunately. At least in my world, my pipe dream were to be for the two agencies to come to some sort of accord and divide jurisdiction. It's been done before. They did it in the 80s with futures. There's no reason why it can't be done again.
Remind me the name of that one.
Shad Johnson.
Shad Johnson, that's right. Well, on that nerdy note, we will bring this to a close, but I'm glad, Cass, that you brought a little bit of optimism into the conversation at the end. I, too, am a little bit more optimistic on the jurisdictional bill, and the Banking or Financial Services Committee being willing to sort of cede some ground to the Ag Committee is a good sign on that. So let's end on that note. Thanks for sticking with us to the end. Appreciate it. Enjoy the rest of the conference.